So this would be a rollout of my taxable brokerage account. There's a little bit of growth, a little bit of dividend growth, a little bit of speculation, and finally some passive in this. I sit back and enjoy me going through and chronicling the holdings in here, not to be duplicated. There are no two portfolios the same, but it can certainly help you understand how I seek my exposure to the stock market and help you in establishing a framework that'll work for you. Guys, stay tuned. So we'll kick off 2021 and we're going to roll out the progress that we've been making within each of the accounts. What you're looking at here is a taxable brokerage account. This is one of 3 accounts that I hold. This was started last year and it's been fun to grow this up. It's really nice to have the freedom in this account. I do fund my Roth IRA accounts maximum funding every single year. So for you guys that are wondering whether or not you need a taxable brokerage account or you should start with a retirement account, I would always encourage everybody to look at the prospects of starting a retirement account first. So, if it's any indication, I've been investing a long time and this is a fairly new account for me. Okay. So these are a great way to communicate with the subscriber base on the channel. Obviously, I'm a self-directed investor. This really does lend to the success of a self-directed investor. This account is subject to tax, ramification, etc. That's totally fine. I've established some strategic goals within this account, that of which I'll briefly cover in this video to give you guys some idea of what I'm investing in. This is a real account and let you guys know some of my thoughts behind each of the holdings that I have within the accounts. Let's jump right into it. For you guys that have followed me for a while, I've been in and out of Amazon for many years. I've made just a ton of money with Amazon over the years. It's just a phenomenal company. It's in one of the sectors that I find pretty difficult to invest in, to be honest. I think discretionary is a tough sector, and Amazon's right there at the top with Alibaba. And you've got to pay for both of them. Alibaba being certainly a much more inexpensive than Amazon at this point, but priced to itself, Amazon looks really good right here. And just to fill up my discretionary space with any other name would be kind of crazy. McDonald's, Home Depot, and Leggett & Platt, which is also in this portfolio, round out my discretionary exposure, and that's it. That is it. Aside from what's in the specialty ETF, with discretionary, those are the 4 names that really make up my discretionary exposure, and I'm fine with that. I don't like a lot of the names in the space. I don't like to get too cute. There's a lot of areas in discretionary that I don't like to invest in. And there's some companies out there that I always keep my eye on, but have never invested in, Nike being one of those. But discretionary is fickle, and once a brand kind of falls out of favor, it can really hurt from an investor's perspective. But Amazon is the Internet of Things, and to hold 2 shares long in this account is an increase from the 4/10 of a share that I held in M1 Finance. So this was actually a quadrupling of the Amazon exposure here, as I felt like it was offering a pretty good entry to the stock here. At just over 80 times, and priced to itself relatively cheap when considering what you get from the stock. The next on the list is Boeing. Boeing is one of those that I want to hold long. I don't know how long the company is going to stay here in the 200s. I really do down the line, whether it be within 5 years. Would love to see a 4 or 5 in front of that stock price, and I believe we'll get there. Just emerging from what has been a fairly tumultuous couple of years for Boeing. But it's an industrial that I don't mind owning. It's such a huge company. 17,000 suppliers are connected to Boeing, and it makes up a large percentage of our GDP. Wanted to, of course, get some strategic access to government contracts. which Boeing and Lockheed Martin have both just been absolutely killing it. They're both out of favor right now, but I do see that changing, especially for Lockheed Martin, which is one of my favorites in the industrials space. Lockheed Martin is as well in this portfolio. So to make up some strategic allocation within industrials, Boeing, General Dynamic, and Lockheed Martin. All right. Bank of America is the lone financial in the list here. Financials have gone on a recent run up. Love the company, and its prospects going forward are quite good. I don't mind holding it. I do have some covered calls against Bank of America that are in the money, so we'll have to monitor that position and see if it's going to get called away. It's no big deal if it does. I'll just buy the stock again, get creative. We'll take a look at it if that does in fact happen, but I'm not too worried about it. But Bank of America is the lone financial here. And then Bristol Myers Squibb on the list here in healthcare. It's my lone healthcare on the list. So I am trying to diversify across multiple sectors. I don't need to jam all the healthcare within the Roths. This is kind of a standalone portfolio that I'm looking to gain some exposure into some of those companies that, the brokerage just gives me another option to do so. And I love investing this way. I think it's great. It just rounds out my total comprehensive portfolio that much better, and just opens up another bucket to gain some strategic exposure to. Now Disney was one of those that I wanted to take a small starter position in. I really didn't want to hold Disney within the Roths. It seemed to fit here nicely in the telecommunications sector. I needed to increase my exposure. Telecommunications is another one of those sectors that is somewhat fickle for me. It's a strange sector, with companies like Google and Disney and AT&T all in the same sectors is kind of weird. So I find myself struggling to really rationalize exposure across telecommunications, but I think I do a fairly good job of gaining exposure. I do hold Disney, I do hold Google, AT&T, and Verizon and the like. So it's a good sector, usually a fairly nice dividend there, but Disney is a kind of a strategic play. I really like what they're doing in the streaming space, and we'll continue to hold Disney long. Now, a couple picks that I want to explain here with Duke Energy and Southern Company. These are the two utilities plays that I have in the portfolio. And you'll notice that these are relatively sizable positions. This is about 2% of the portfolio. Southern Company just over 1%, 1.5% of the portfolio. So rather large, significant positions, both 100 share positions. I did not feel like the premiums were good enough to write contracts against in this. Nonetheless, we'll continue to enjoy the nice dividend in both of these companies. These are really what I choose to hold in lieu of bonds. I've explained this before on my portfolio reviews, and will continue to own them and just dollar cost average, dividend reinvest these into themselves and look to grow the positions and collect that dividend yield over time. So the loan speculation play here in the portfolio is Hyliion Holdings. Have great prospects for this company back half of 2021. A lot of fun to own this company, and we're glad to own it. And it'll be fun to track going forward as we look to enjoy some real capital appreciation as Hyliion rolls out its Hypertruck ERX back half of 2021. Altria Group is the lone staples that I have in the portfolio, as well as AT&T here, which is the loan, which is the telecommunication with Disney that's newly added in here, but a rather large position, and I do own some covered calls. I don't think those will even get close to covering here at $29. We'll see. Knock on wood. We'll see what happens. That's totally fine, but a nice entry here on AT&T at $29 a share. In telecoms, and at over a 7% dividend in AT&T, again, I would rather own this company than own bonds. And then finally, VTI here with the total stock market index. I own a relatively small position. I do say that tongue in cheek, really anticipating that if the market does end up in a downturn here, then I can average down in the total market, and I can average down in an amount that makes sense for me. And I always want to have this drop point for funds to buy the total market here in the brokerage account. So hope you guys enjoyed the transparency and walking through some of the options and futures that I hold in the brokerage account, some of the ideas that I have here with some growth, some speculation growth, some dividend plays, and some total market ETF here in the brokerage account. We'll kick you back to YouTube and we'll conclude the video. So we've come out of the taxable brokerage account here. Really glad to roll out this six-figure portfolio to you guys. I hope you appreciated how I seek my exposure to the market. That's really the only reason why we roll these out, is for awareness purposes, in understanding what good stocks and what good companies are out there, and how I seek my exposure to them in the taxable brokerage account. Guys, if it's your first time to the channel, want to make sure and subscribe to the message. Want to share the message with those folks out there that need some introductory information to the stock market. Bring them on the channel. We'd be glad to have them. And finally, leave your comments at the bottom of this video. Let me know what you're thinking. Let me know what you think of the picks within this portfolio that's disclosed to you on this video. Guys, thank you so much for tuning into the message, and good luck in your investment future.